Hey everyone, and welcome back for another deep dive.
I'm glad to be here.
Today we're going to be talking about something that I think is really interesting, and that's the relationship between price and volume in trading.
Yeah, definitely. It's something that's often overlooked, I think, by a lot of new traders. They get really caught up in indicators and things like that.
Yeah, they want to find that, magic holy grail indicator that's going to tell them exactly when to buy and sell.
Right, exactly. And they kind of forget about the basics.
The fundamentals.
Yeah, the fundamentals of supply and demand, which are really reflected in price and volume.
Exactly. And I think, we've all been to like an auction, right, where you see something that people really want and the price just keeps going up and up and up.
Yeah, you got a packed room, everybody's bidding.
Everyone's bidding, the volume is high, and that's driving the price up.
Exactly. And it's the same thing in the markets. When you have a lot of buyers coming in, the volume's going to increase, and that's going to push the price up.
So I guess the first thing we should really talk about then is price. Yeah. Because, we look at a chart and we see the price going up and down, but what is price really telling us?
Yeah. So price is really just an opinion, right?
Okay.
It's the collective opinion of all the buyers and sellers in the market at any given time.
So it's like a constantly shifting balance.
Exactly. It's like a seesaw,
Okay.
tilting back and forth as buyers and sellers battle it out.
So then if we're just looking at price, we're kind of just seeing what's already happened, right? We're not really getting any insight into what might happen in the future.
Right. And that's why a lot of people get caught up in what we call lagging indicators.
Okay.
Things like moving averages or MACD or stochastics.
Yeah.
These indicators are based on past price data, so they're always looking backwards. They're not really telling you what's going to happen next.
It's like trying to predict where a car is going by looking at its tire tracks.
Exactly. Or like using a roulette wheel system,
Right.
where you bet on the numbers that have come up the most in the past. It doesn't really work because past performance doesn't guarantee future results.
So if these lagging indicators aren't the answer, then what is?
Well, that's where volume comes in.
Okay.
Volume is really the key to understanding the force behind price movements.
So it's like the fuel that's driving the car.
Exactly. It tells you how much conviction there is behind a particular price move.
So if we see a big price move, but the volume is low, that might be a sign that the move isn't really sustainable.
Right. It could be a false breakout or a trap.
Okay, so how can we actually start using volume to make better trading decisions?
Well, one of the simplest ways is to look for confirmation of trends.
Okay.
So, for example, in an uptrend, you want to see increasing volume as the price moves higher.
That makes sense. More buyers coming in, pushing the price up.
Exactly. But if you start to see the volume declining, even though the price is still going up,
that might be a warning sign.
yeah, it could be a sign that the buyers are losing interest and the trend is about to reverse.
So it's like a car running out of gas.
Exactly. It might keep coasting for a little while, but eventually it's going to come to a stop.
So then the opposite would be true for a downtrend, right?
Right. In a downtrend, you want to see increasing volume as the price moves lower.
Because that shows that the sellers are in control.
Exactly. And if you start to see the volume declining, even though the price is still going down,
that might be a sign that the downtrend is losing steam.
Right. It could be a sign that the sellers are getting exhausted and a reversal could be on the horizon.
Okay, so we've talked about how volume can confirm trends, but are there any other ways we can use it to make trading decisions?
Yeah, absolutely.
Okay.
There are a lot of different volume patterns that can give you clues about what's happening in the market.
Okay.
For example, one pattern that traders often look for is called a volume climax.
Okay, a volume climax.
Yeah, this is when you see a huge spike in volume, usually accompanied by a sharp price move.
So it's like a sudden burst of activity.
Exactly. It's like everyone's rushing to get in or out of the market at the same time.
Okay, so what does that tell us?
Well, it can be a sign of a few different things. It could be the end of a trend.
Okay.
Or it could be a sign of a major support or resistance level being broken.
Yep.
Or it could just be a short-term spike in volatility.
So how do we know which one it is?
Well, that's where the context comes in.
Okay.
You need to look at the overall trend, the price action leading up to the volume climax.
Okay.
And other factors like news events or economic data.
So it's not just about looking at volume in isolation.
Right. You need to consider the whole picture.
Okay, so a volume climax could be a signal to buy or sell, or it could just be a sign of increased volatility.
Exactly. You need to be careful about jumping to conclusions.
Okay.
Another volume pattern that traders often look for is called absorption volume.
Absorption volume. Okay.
Yeah. This is when you see a large price move, but the volume is relatively low.
So it's like the price is moving effortlessly.
Exactly. It's like someone is quietly accumulating or distributing a large position without making a lot of noise.
So this could be a sign of institutional buying or selling.
Right. Or it could be a sign of a market maker absorbing orders.
Okay, so absorption volume can be a bullish or bearish signal depending on the context.
Right. You need to look at the overall trend and other factors to get a sense of what's going on.
So it seems like volume can really give us a lot of insights into the market that we wouldn't get from just looking at price.
Absolutely. It's a powerful tool that can help you make better trading decisions.
Okay, so we've talked about a few different volume patterns, but I'm sure there are many more.
Oh, yeah. There are tons of different volume patterns and techniques that traders use.
Okay,
But the key is to start with the basics.
okay.
Learn to recognize the basic patterns, and then you can start to build on that knowledge.
Okay, so we're going to be talking more about volume in the next part of this deep dive.
Yeah, we're going to dive into volume price analysis, or VPA.
Okay, I'm excited to learn more about that.
Yeah, it's a really powerful technique.
All right, so stay tuned for part 2 of our deep dive into volume.
We'll be right back.
We'll be right back after this short break.
Don't go anywhere. Welcome back. All right, so let's dive a little deeper into this idea of volume and how we can use it to make better trading decisions.
Okay, sounds good.
So we talked about some of the basic volume patterns, like the volume climax and absorption volume.
Yeah.
But there's a whole field of study called volume price analysis, or VPA.
Okay, VPA.
Yeah, and this is where we really start to get into the nitty-gritty of how volume can reveal the underlying forces driving the market.
Okay, so it's like taking our volume knowledge to the next level.
Exactly.
It's like,
And one of the key principles of VPA is this idea that volume precedes price.
okay, volume precedes price. What does that mean?
Well, it means that changes in volume often happen before changes in price.
Okay, so it's like volume is giving us a heads up.
Exactly.
Okay, so if we see a big increase in volume, that could be a sign that the price is about to move.
Right. It could be a sign that something's brewing.
Okay, so how can we use this to our advantage?
Well, there are a lot of different ways to use VPA,
Okay.
but one of the most common is to look for divergences between price and volume.
Okay, divergences.
Yeah, so for example, let's say you're looking at a stock that's been in an uptrend,
Okay.
and the price is making new highs, but the volume is starting to decline.
Okay, so the price is going up, but the volume is going down.
Right, and that's a divergence.
Okay.
And it could be a warning sign that the uptrend is losing steam.
Okay, so it's like the price is running out of fuel.
Exactly.
Okay, so what would we do in that situation?
Well, it depends on your trading style and your risk tolerance.
Okay.
But you might consider taking some profits off the table,
Okay,
or
yeah.
tightening your stop loss order,
Right.
or even exiting the trade altogether.
Okay, so basically we're using volume as a way to confirm or question the price action.
Exactly.
Okay, that makes sense.
Now, another way to use VPA is to look for what's called effort versus result.
Okay, effort versus result.
Yeah, so this is where we compare the amount of volume to the size of the price move.
Okay, so if we see a big price move with low volume,
That could be a sign that the move isn't really sustainable.
okay, because there's not a lot of conviction behind it.
Right.
Okay, and if we see a small price move with high volume,
That could be a sign of strong buying or selling pressure.
okay, so it's like the market is really trying to move the price.
Exactly.
Okay, so effort versus result is another way to gauge the strength of a price move.
Right.
Okay, that's interesting.
Now, another important concept in VPA is volume spread analysis.
Okay, volume spread analysis.
Yeah. And this is where we look at the distribution of volume across different price bars.
Okay, so instead of just looking at the total volume for a given period.
Right, we're actually breaking it down
Okay,
and looking at where the volume is concentrated.
okay, so what can that tell us?
Well, it can tell us a lot about the balance between buyers and sellers.
Okay,
For example, if we see a lot of volume near the high of a price bar,
that could be a sign of strong buying pressure.
right? Because the buyers are willing to pay up to get in.
Okay, and if we see a lot of volume near the low of a price bar.
That could be a sign of strong selling pressure.
Okay, because the sellers are willing to sell at any price.
Right.
Okay, so volume spread analysis can give us a more granular view of the market.
Exactly.
Okay.
I like that. Now, there are a lot of different ways to use volume spread analysis,
Okay,
but one common technique is to look for what are called buying and selling climaxes.
okay, buying and selling climaxes?
Yeah. So a buying climax is when you see a high volume bar near the high of a price bar,
Okay,
and it's usually followed by a pullback.
okay, so it's like the buyers have exhausted themselves.
Right.
Okay, and a selling climax is the opposite, right?
Right. It's when you see a high volume bar near the low of a price bar,
Okay.
and it's usually followed by a bounce.
Okay, so it's like the sellers have exhausted themselves.
Exactly.
Okay, so buying and selling climaxes can be good signals for reversals.
Right.
Okay, this is all starting to make sense now.
Good.
So we've talked about a lot of different VPA concepts.
Yeah.
But I think the most important thing to remember is that volume is a leading indicator. It can give us clues about what's going to happen in the market before it actually happens.
Exactly.
So by paying attention to volume, we can get a real edge.
Absolutely.
Okay, so what's next?
Well, let's take a look at some real-world examples.
Hey, look at us,
I
Joe.
think that'll really help to bring these concepts to life.
Sounds good to me. Okay, so let's see this VPA stuff in action then.
All right, so let's say we're looking at a stock chart, and we see that the price has been in a nice uptrend, making higher highs and higher lows.
Okay, classic uptrend.
Right, but then we notice that the volume is starting to decrease on those upward moves.
So price is still going up, but the volume's drying up.
Exactly, and that's a classic divergence signal.
Okay,
It's telling us that the buyers are starting to lose interest, even though the price is still going up.
so it's like a car that's running out of gas.
Exactly. It might keep coasting for a little while, but eventually it's going to stall out.
So in that case, we might want to start thinking about taking some profits or tightening our stop loss orders.
All right, exactly.
Okay, so that's an example of how we can use VPA to spot potential trend reversals.
Right.
Okay, so what about some other examples?
Well, let's say we're looking at the futures market, and we see that the price of crude oil has been consolidating in a narrow range for a while.
Okay, so it's kind of stuck in a sideways pattern.
Right. But we notice that the volume is consistently high during this consolidation period.
Okay, so that means there's a lot of activity going on, even though the price isn't really moving.
Exactly. And if we look closer at the volume spread analysis,
Okay,
we might see that most of the high volume bars are occurring near the lower end of the range.
so that means there are more buyers than sellers at those lower levels.
Exactly. And that could be a sign that the market is accumulating.
Okay, so it's like a spring being compressed.
Right.
Okay, and then when the price finally breaks out of that range.
We would expect to see a surge in volume to confirm the breakout.
Okay, so that would be a bullish signal.
Right.
Okay, so we've seen how VPA can help us spot trend reversals and breakouts. Okay, so what about other markets like Forex?
Well, VPA can be used in any market where there's volume data available.
Okay.
And in the Forex market, one of the things we can look for is volume spikes.
Okay, volume spikes.
Yeah. So this is when we see a sudden surge in volume that's significantly higher than the average volume.
Okay, and what does that tell us?
Well, it can tell us a few different things.
Okay.
It could be a sign of a major news event,
Okay.
or it could be a sign of a large order being filled,
Okay.
or it could be a sign of a stop loss run.
Okay, a stop loss run.
Yeah, that's when a lot of traders have their stop loss orders at the same level.
Okay.
And the price breaks through that level,
Okay.
triggering all those stop loss orders.
Okay, so that can create a cascade effect.
Exactly.
Okay, so volume spikes can be a sign of increased volatility.
Right.
Okay, so we need to be careful about trading around them.
Right. Exactly.
Okay, well, I think this has been a really helpful deep dive into volume and VPA.
Yeah, I hope so.
I feel like I've learned a lot.
Good. I'm glad.
And I'm definitely going to start paying more attention to volume in my own trading.
I think you'll be surprised at how much it can improve your results.
Okay, well, thanks for sharing your knowledge with us.
My pleasure.
And thanks everyone for listening.
To you.
We'll see you next time.